and he's also worked as a lecturer at Ashesi. Holds a BA in Economics and Law, first class KNUST, University of Science and Technology, master's degree in Economic Policy Management and Corporate Strategy from the Maastricht School of Management in the Netherlands. Ladies and gentlemen, please help me welcome the one and only Sampson Akligoh. Last but not least is Awura Abena Agyeman, co-founder and CEO of Wear Ghana, one of Ghana's foremost fashion labels. Prior to co-founding the company, she supported entrepreneurs as client relationship manager for 4 years with ProCredit, an innovator in SME financing at the time. This early exposure to the world of entrepreneurship in Ghana gave her a strong appreciation for how business works in the local environment and how to navigate the nuances associated with surviving as a female business owner in this part of the world. Her engagement with entrepreneurs during her time at ProCredit began the development of a strong network in the business community that has contributed to her success, both from the direct-to-consumer demand as well as corporate demand for her products. She sharpened her skills as an entrepreneur and a manager, taking part in several value-add programs, including the Serve-Led Accelerator Program, 2018 Africa Forum in Egypt, recently a fellow of the prestigious Young Africa Leaders Initiative, YALI. She believes business should be both profitable and impactful, and is using her company as a tool for solving Africa's unemployment problems. I think you should smile at that one. While creating opportunities for underprivileged in society, particularly marginalized women. She's passionate about inspiring the next generation of African entrepreneurs and volunteers her time in this regard. BSc in Agric Accounts from KNUST. She loves music, dancing, and working out. I can relate to that better. Put your hands together for Awura Abena Agyeman. So what we will do is that you will give me a round of applause whilst I organize myself and go and join the panel. And whilst I'm doing that, we will say to our audiences, this program is live and interactive. It's coming to you from the prestigious UPSA. Thank you so much for joining us, prestigious panel. I want you to test your mics to make sure we are all on the same page. So, great to see you, Dr. Debrah. Good afternoon. Great to see you, Abena. Good afternoon. They didn't give you a mic. Discrimination. Great to see you, Sampson.
Thank you.
Make sure the mics are on. Awura Abena, good afternoon. Good to see you. Business School, UPSA, great to see you. Good afternoon. Are you happy we are here? Are you proud of your school? Put your hands together for the school. Since all my panel members are wearing masks, I'll remove mine briefly because the mask and the earpiece is confusing me, so please help me. I'm wearing glasses, I'm wearing a mask and something. So I'm looking like a headless chicken. So please, come and remove this thing for me, it's confusing me. So I'm going to start with Sampson, okay? So people say they are looking for credit. Young people want to start business, they don't have access to credit. Government says in the budget, we have a solution, among other solutions. We are going to set up a development bank. In 2 minutes, give us some context to this development bank and why the government is so convinced that this is the route to go, among other things, in addressing this issue of long-term capital.
Thank you very much. Thank you, Bernard.
He's very soft-spoken, so please give him a big volume.
I was actually hoping that, maybe you start from the
I don't think your mic is on, so let's work on that. Yes.
Yeah. So, I think the fundamental issue, especially as I look at this hall and I look at the academia and I look at the young people, the first contextualization that came to mind is that, the minister keep reminding in a lot of statements that we have about 70% of young people in this country. And all of us know that as a country, we are at a point that we must minimize the dependence of people on government. And what does that mean? It means that that's the whole idea of, one, ensuring that young people understand entrepreneurship, getting businesses started, and be willing to work in the private sector becomes so fundamental to our future. Then secondly, the businesses that we have, we must find a way to make them have the appropriate financing and structures to get them work. And therefore, this development bank has become very important in making sure that that foundation in the financial architecture is laid. And that is the underlying reason why a lot of work is being put into it, so that we'll be able to create that enabling environment for this to work. And I think that for most of us in this room, we cannot pretend that as a country, one of the key challenges that we have is how do we get our people to work? How do we create our next commercial farms? How do we build those big Telstar companies? And you can't do that if you don't have access to long and patient capital. And therefore, as much as we've tried and tried before, we must find a way to create an institution that will make this work for us. And so, Bernard, that really is the foundation of this whole conversation about development bank and doing it differently.
We already have the Agricultural Development Bank and the National Investment Bank, which is also supposed to be a development bank. How different will this proposed bank be from the existing development banks?
Yeah, thank you very much, Bernard. So this development bank is going to be totally different from the earlier ones that we had in some respects. The first one is what you mentioned. It's a wholesale bank. One of the, when we started the conceptualization of the bank, actually, one of the original ideas was that it would take NIB and ADB, strengthen them and get them to do this work. But of course, as a government, also technocrats in the ministry, you cannot do anything without getting professional expertise. So the government, through the minister, formed a team of professionals, mostly Ghanaians. And when the work was done and they studied the situation of those two banks and what they have become over the years, they advised that it is not, one, appropriate to use those banks. And secondly, they also studied the model of development banks that have been more successful in the world. And they realized that the wholesale development banks are more impactful than retail development banks. So the idea is that set up a development bank that is well capitalized, that meets international standard, and has the capacity to attract money, both local and foreign, and then is able to channel that money, not directly to businesses, but directly to some of the institutions like ADB, NIB, the ecosystem of banks, some of the institutions we have like GIF, some institutions like, I think we have ESM, the ESM Bank, and also, and most importantly, to some of the capital market institutions that we need to have, which includes the private equity funds and the venture capital funds. And so you see that the totality is that some of the things that we have done in the past, if you have a retail development bank, it creates a captive market. It goes directly and starts supporting businesses. When you have a wholesale development bank, it out of many institutions that can influence to get the work done. So the resilience of a wholesale development bank is more, can stand the test of time compared to a retail development bank. So this essentially influenced a lot of the decision taking. And lastly, we also wanted to make sure the mistakes of the past were not repeated. So we decided with some of the best development banks in the world. In particular, we are looking at the KFW model because this development bank, the government envisaged, is supposed to be transformational. And so if you look at done in Germany, it was more like, in fact, actually, they even call it a promotional bank. So it's a bank that was able to help transform the German private sector and work through their financial system to provide long-term capital. So that became a very important aspect that we wanted to learn. And so we started a genesis, working together with these international partners to make sure that we have an institution that can create an impact for the country.
Okay, so in the brief discussion between Prof and myself before this, there are two issues. The length of time banks give institutions for credit is very short. These people need long, patient capital. Number two, the sectors that they focus on are not the sectors that we really feel are transformative, agric and manufacturing. Convince us that the development bank will solve these two problems.
Thank you. this one is more like maybe some essay test. Yeah, so I'll try, and I hope the professors will give me a good mark.
It could be a question for the final exam, so start writing your notes as well.
Yeah, so I think essentially, I'm just, one, I want to be a bit practical. One, the first thing that we decide to do is that, if you work in government sector, they said if you want something sustainable, pass a law and try to make it properly regulated. So the first thing we have done is that we went to Parliament, and through a bipartisan process, we passed a Development Finance Act. That Development Finance Act, if you look at the preamble, it clearly states that a development finance institution must focus on economic growth. Then we also said that the development finance institution, I think 75% of the money that you have must be used for long-term money. So when you set up this institution, 75% of the total portfolio of this institution must be 5 years and above, if my memory serves me right. So from the foundation, what we have clearly created through a legal framework is that this institution is not a short-term institution. If you have money, don't give it to people as short-term credit. The universal banks, if you look at the banking, their law doesn't provide for this. So we try to create a permanent long-term structure for this to happen. Then secondly, we also realize that, look, you can't, if you have the development bank, the institutions through which it must channel the money must be broadened. A lot of us who are into finance know that banks, commercial banks, are not suitable for giving long-term finance. So the spectrum of the institutions that the development bank will work with, the minister has repeatedly said we have broadened it beyond commercial banks to include private equity funds and venture capital funds. In fact, actually, even a lot of work is even being done to get institutions that will better support the development bank. One of them is as we said, to strengthen the ADB, NNIB, to become specialized, in fact, actually to become retail development bank, essentially, to get them to do the work that they're supposed to do better and see how they can get support from the development bank. And also, we think that we are thinking very well about how do we get even bigger private sector institutions in the country, even supported by government, that can make sure that long-term equity and also preferences and co also get to our businesses. And then I'm happy that I'm with Abena here. How do we also get a development bank to tweak some of the bad behaviors that we have? Like, in this country, a lot of money that we have ourselves, we channel it to short-term uses. So if you take our pension fund, for example, the little that is outside government, a lot of them go to the banks, and banks will use that money for short-term credit. One of the capacity of the development bank is that it will have the capacity to mobilize those pension money, and then its use, final use, then become for long-term. So here, the stock exchange then becomes very important in helping us to.
And I'm sure Abena will deal with that. So thank you. Is it making sense? Then put your hands together for him. This is the Development Finance Series coming to you live from UPSA. We're discussing the role of development bank proposed in giving access to long-term finance to SMEs. So we have a hint of what the intention is. But let's understand the problem better. I'm coming to you, Abena. You worked in a bank, and now you run your own company. So nobody can deceive you about what your needs are. Talk to us generally about the typical financing needs of an SME and why a lot of them struggle to get money.
So it's an interesting question, because when we talk of SMEs, the definition of an SME in terms of, say, revenues, it shows that it's a very wide spectrum. So NBSSI, for example, defines it to be annual turnovers of between $200,000 and $5 million. That's such a huge gap. So then the question becomes, which of the SMEs are we talking about? Because if we are talking about an SME like mine, whose turnovers would be around the bottom part of it, our needs would be quite different from the ones around the $5 million. And the challenge is, what the banks in Ghana have liked to do over all these years has been to comfortably sit with those at the upper end of this, where there's a lot less risk. So before I came here, I feel very heavy sitting here, not only intimidated by the number of degrees to my right, but also because I recognize the fact that I sit here on behalf of a lot of people. I sit here on behalf of people who started businesses here in Ghana and couldn't succeed because the financial institutions simply did not support them. I also sit here for my colleague entrepreneurs who are struggling, like I am. But even more importantly, I sit here on behalf of the next generation of entrepreneurs that are coming up. And the question that I tried to ask my colleague entrepreneurs was, here's what the government says it's doing. What are your thoughts? The first thing is there's a lot of mistrust. And I think that that's where the conversation really has to start from. Why should we care as entrepreneurs who have been told all sorts of stories in the I don't have to go far. We've already talked about ADB and NIB and what the challenges have been. So really, why should we care if now there's talk about a development bank that's coming up? It sounds really good because like the data shows, I am into manufacturing. Only 8% of financial support goes to people, businesses like mine. And then we talk of agriculture, and it's just 4%. So clearly, it's a very funny place as a country for us to be in. And if we hear that there's a development bank coming, that is saying that it's going to solve these problems. And offer long. That exists. Yeah, so this would be my
opening remarks. Okay. Yeah. So my next question to you is, you are still on the floor. Okay. Do you actually need money? Because when I meet some of these SME people, they are like, the business environment is too complicated. There's so many other problems. So some of them think money may not even be the most important thing they need. Some will say we need office space, we need simpler registration, we need electricity, we don't want doom saw and things. So if I said to you in terms of the top 5 things a typical SME like yours would need, will long-term finance even be one?
Absolutely. We've been in business for 7 years. And if you had asked me this question 3 years ago, I'd have said money probably is not one of the top 5. But at this point where we have proven the business model, where we are at the point where we are growing, we absolutely need money. And every day, we see how opportunities can be lost because we don't have access to patient capital. So we absolutely need money to be able to grow. We need money to finance some of the investments that we must make as a company, buy certain types of assets that will improve productivity, even money to hire the right team. Because you build a business to a certain point, and the thing that becomes the game changer is the team that is managing the business. No one will work for free. You can sell the dream and attract a certain type of talent, but really, when you're at the point of recruiting, very recently, I sat and started asking myself very interesting questions because we're recruiting, and I was talking to people who, that was me a couple of years ago. People who have worked in the banking sector for maybe 12 years, and someone telling me, oh, well, I really like a company, and so I'm just looking for you to match what I'm currently getting. I don't want to even increase my ask, and yet the ask is like, whoa, we cannot pay. And that's the problem. We keep talking about how Ghanaian businesses, for example, do not survive one generation. And some of these are the real problems. How to hire and remunerate the right type of talent that can make us competitive. And it is for this reason that after a business has proven itself, absolutely, we need money.
Wow. Is she making sense? Well, then what do you have to do? Amazing. I have a few more questions for you, but I'll wait and come back to you. What I wanted to do was to bring in Abena. So you are Awura Abena and you are Abena. The Tuesday people have taken over. So Abena, a couple of things come to mind. So we're talking about financial deepening being very low. And then we're also saying that there isn't access to long-term capital. And I'm asking, but you guys have been there for 30 years. So, and what I understand about the capital market is that you can go there and say, hey, I have a great company. I've done well for 6 years. I want to give you 10% of my company for $1 million seed. Come and give me money. So if you guys are working for 30 years, how come the graphs they show us suggest that there's still no money? Right. So Abena, please start with that.
Thank you very much, Bernard, and thank you to all of you at UPSA for having us here. Abena represents a fantastic brand called Wear Ghana, which I proudly own and support. So those of you who don't have your Wear Ghana shirts yet, please get them.
Thank you for doing what I should have started.
I think the Ghana Stock Exchange is a market that is set up to make sure we are an efficient securities market, relevant to Ghana's economy by providing access to long-term capital and investment. And you're right, Bernard, we were set up 31 years ago. And in the 31 years, we have set up 3 markets. Okay. We have the main market for shares. Has anyone in here bought shares? When was the last? Is anyone here a member of an investment club? I can't see any hands going up. UPSA business students are not forming investment clubs. But this is what we are there for. We are there for providing long-term capital and investment. So we set up the main market for equities, and I see there aren't enough shareholders in here, so we need to work on that. We set up in 2013. Hello. In 2013, we set up our second market, especially targeted to SMEs. And you're absolutely right. The definition of SMEs now, there's even an M before the SMEs. So micro, small, medium enterprises. It's a very wide range of companies. But we set up this market to make it very easy for SMEs to raise capital from the Ghana Stock Exchange. Long-term, patient capital. And 6 years ago, we set up our third market called the Ghana Fixed Income Market. The market we set up for the SME sector is called the Ghana Alternative Market, or the GAX market. And then the Ghana Fixed Income Market, which joined our bouquet 6 years ago, is where all fixed income securities, all long-term loans, instruments are raised, long-term capital for both SMEs and for relatively large companies. There has been some interesting successes and not a lot of things we can do better. In the 31 years, companies have raised 5.4 billion Ghana cedis in equity capital alone, just issuing shares to shareholders. So 5.4 billion has been raised in 31 years on both our main markets and on our alternative markets. In 6 years, corporates have issued and raised 12 billion Ghana cedis in debt or fixed income instruments. Most of them 5 years and longer. But there's still a lot of work that we need to do. Our GAX market, which is our market we set up for the SMEs, there are virtually very few requirements to list on the market. The minimum capital you must have at the time you are listing on the GAX market is 250,000 cedis. It means that you can come to this market, raise 250,000 cedis, and be listed on the market. What we found is that a lot of businesses in Ghana, when you start a business, any of the people in here want to be business owners? Now I see hands going up. When you start a business, you probably start here whilst you're at school. You want to say, do some fruit juice. You start in your room with your blender buy some fruits, find a few bottles, you start selling them, testing with your friends. Then you get a wedding order coming up. What do? You call your roommates together, they put some money together for you, you go and meet that order. So most small businesses will start from the family and friends position. Do not think that you graduate from here today, you step out there and there's a bank willing to give you 2 million Ghana cedis, 5 million Ghana cedis. You've never run any business before. You've never tested what it is to go into manufacturing. So first, you must understand that you start as a family and friends basis. You will grow 7 years into your business and get to where Irabna and her brand is. That is where you start looking at third-party people who do not know you, but who have seen your products out there and say that we believe in the vision of this person. We have seen that you've tested your product. Your product has future and has growth. And so here we are able to support you with additional capital because you invest in people, you invest in systems, and you invest in equipment to meet that objective. So that is that level where you start talking to the banks, you start talking to what we call other investors who will put long-term patient capital. What we are finding is that a lot of our business owners do not want to give up what we call equity capital or share capital. Many businesses want to own 100% of a 10 cedis company than give up 40% so that someone else's money can come in and transform that 10 cedis company into a 100,000 company, which you own 60% and your other partners own 40%. So a lot of businesses now turn themselves in their structure into borrowing and borrowing and borrowing when long-term capital includes some level of borrowing, but also some level of what we patient capital. The thing with the loan is that if it's 5 years, you will pay it back. In Ghana currently, our interest rates are relatively high. So first there is the access. We haven't even talked about the cost of funds. The average commercial loan is 25% if we are lucky, right? So that is every year, a quarter of your funds have to be paid back to the bank, even before you start your principal amount. And so continue to encourage investors. Financial structure looks at two key: your equity or your shareholding type investments, and then your debt side of the investment. The good thing about equity investments is that you don't have to pay it back, but you have to manage the business well so that it makes profit. And when you make profit, you are able to give some back to your investors. If your business is listed on the stock exchange, the price of those shares as you do well can go up so that your investors can realize their investments in your company. So for us, providing access to long-term capital is twofold. There's the debt side, which is important, and the work the Ministry of Finance is doing by pushing and promoting this development bank, which we are wholly in support of, is critical. But there's also another which is raising long-term equity capital, inviting other shareholders into your business who can help you with the corporate governance. You know, the governance requirements that strengthen.
Wow. Thank you very much, Abena. We apologize for the sound. I didn't even ask them to clap. They are clapping. That was like spot on. So clearly, the idea of dealing with long-term capital, you understand and you've explained. I think the other question people will expect me to ask is the relationship between what they intend to start and what you've already done. Because you've already given us GSC, GACS, GFIM. So what's the relationship between what's coming and what's already existent?
It's a very symbiotic relationship. It's a very, we are co-partners and co-developers in the sector to make sure that our companies get access to the long-term funds that they need. The Development Bank will be looking to finance itself. The Development Bank itself can use the Ghana Stock Exchange to raise capital. The Development Bank is there to influence the behavior of other financial institutions, the banks, the venture capital companies, the private equity funds, the Ghana infrastructure funds, and other institutions to influence their behavior to make sure that they are lending to the target sectors that the Development Bank is looking at. The other thing is that the Development Bank can also influence how the investee companies themselves behave. So that when we give money to Where Ghana, we are able to say that, Abena, you are CEO. Put yourself on an employment contract with Where Ghana. The money of Where Ghana is not your personal money. As CEO, you have no right to dip your hands into the company's assets or the company's accounts and use it for your personal use. So we will, through the Development Bank, we will instill proper governance structures. Because Bernard, you are right. A lot of the companies, it's not just capital, but it's also the governance structures that ensures that these companies live and strengthen and survive their founders. So it's a tool that we both share in terms of how we influence these investee companies, including listing some of them within of the Ghana Stock Exchange. So when you look at a typical company, they will then now have access to a more diversified range of financing options at the various stages in the developmental life of the company. Because at the stock exchange, you come there to raise capital when you want the whole Ghanaian public to give you money. There can be 10,000 shareholders in your company tomorrow if you come and raise capital in the stock exchange. Is your company ready to manage 10,000 new partners?
That's the question.
That is the question.
That is the question.
So that is why we need different levels of long-term capital as a company matures and grows in its own.
Amazing stuff. So it's surprising. I am the one who talks a lot and my voice is louder. The others who don't usually do radio, they've given them lower mics. So we'll try and fix that. So apologies for this. What I wanted to do was, so we've heard part of the problem. We've had 2 dimensions of the solution. You are in your work, you do research, and you also mark people whether they are making sense or not. So my question to you is twofold. The proposed solution to the problem articulated, is it grounded? So are they on the right path, or you feel they have to change track? So I'm giving you the first chance to evaluate, since that's what you Dr. Debrah. Please give him some sound. It's very important to me. Yes.
All right, thank you, Bernard, for that question. Personally, when I heard of the Development Bank, what came to my mind was what happened in the 80s and the 90s. You know, when Nkrumah came out with those development banks, etc., all of them are no more. So I said, the demise of these banks and the new bank that is being established, what is going to be the difference? So that at the end of the day, the sustainability of the yet to be started bank or used to be in operational, how is it going to be to really impact our society? I was just analyzing and I said that, well, if you look at research or what others have found out, the focus was on corporate governance failure, right? So if that is the case, then what is the new bank going to bring? So it's a good decision that the government has made, because there is this missing ingredient in the development sort equation, in the sense that issue like long-term finance, with my background in banking and the experience that I had with most SMEs, is this short-term lending. A situation where an SME is given a loan and is repayable within a year or two. How is it going to use that money to generate income, take care of certain expenditure, and be able to even redeem the debt that he has taken? How is it going to? So the coming in of the development bank, when I looked at the preamble of the Development Finance Institution Act 2020, it said they are going to support agriculture and industrial development, which of course, we're looking at what the governing policy of the 1D, 1F, then it tells us that, well, they are also going to, the bank is also going to push that and ensure that they grow. Now, having that in mind, aside that, they are also going to support government in providing what I called social overhead capital. That is in terms of good roads, that is infrastructural development, actually. Now, so if the bank is going to do that, then what about the SMEs that constitutes about 90% of businesses in Ghana, looking at the impact that they are having, mainly in the private sector? How are they going to be supported? So in this case, coming in of this bank, if they're able to put structures in place that will not experience what we had or what we experienced in the 80s and 90s, where Bank for Housing and Construction, Cooperative Bank, all these banks have collapsed, all because of poor corporate governance that we experienced. Then it calls for the need to ensure that the corporate governance structure that they are putting in place, they don't bring in anything, in my view, like political affiliation sort of thing, politics in terms of even execution of a loan or application and all that. Then at the end of the day, if those people in place where they will have the mind of ensuring that the sustainability of the bank, is considered, and making sure that they raise their integrity in terms of the administration of the bank, then we'll have a good place to go.
Good. That question, I'll let him answer, but I have another question for you. So you've raised corporate governance issues. What do you make of the sectors they intend to invest in? From what I see, they said agribusiness with focus on farm value chain, manufacturing, ICT, software and allied services, including BPO and tourism, and then home ownership mortgage finance. So these are their top 4. Does that make sense to you?
Yeah, actually it makes sense, because if you look at it, they are all social overhead capital.
Okay.
They are all within, and they are very, very critical in the growth and development of every country. So they are very, very, that is a good decision that they've made, and I hope that at the end of the day we achieve it. Okay, the execution, may I always say that the execution is the key. You put measures in place, how are you going to execute and ensure that you get what? Benefits out of it, economic and financial benefit. So that you have the issue of having a very good bankability scale or rate, that you'll be able to get adequate return to take care of your cost of fund and also cost of operation.
Brilliant.
And all these relate to corporate governance.
Fantastic.
Right.
We have about 10 minutes to wrap up and come to you. I hope you're enjoying the program. Is it making sense? Put your hands together for your lecturer. Is it making you proud? Is this how we teach it in class? It flows nicely. This is the Development Finance Series organized by City TV, City FM in partnership with the Research and Research and Advocacy Consultancy Center of the UPSA, and we are live from one of UPSA's newfangled buildings here, overseeing the AstroTurf. Very beautiful place indeed. And we have banking and finance students, final years. They have exams in 3 weeks, so they don't have time to waste at all. and they think we are wasting their time. But trust me, some apple will drop here. You know, you can go and be reading your room, but something they say here will help you to write your answer. Even though the calculation questions, we are not sure. So what I'm going to do is to sort of go around quickly. He raised corporate governance issues. Politicians, they spoil everything. You know, would they be looking at party card to be given the loans? That's the question he's asking. Assure us that you have thought through that and you're going to deal with that. Then I have a question for Abena as well. I think Abena asked you a very specific question, right? She didn't direct it to you, but I think essentially most of you people, you want money, but you don't want equity. You want debt. Okay, so you want to die in your socks. You want to die in your socks. You don't want to open your shoes so somebody can help you. You need to address that question she raises. So first how are you going to ensure that party food soldiers don't take over the bank?
Thank you very much. I think that it's quite clear to me that this issue is a legitimate one, and quite frankly, I mean, I have to be very honest. This development bank has been done very, very differently, and as I explained to you, if you even look at the recruitment process, typically the way the bank was set up under the Companies Act even give us some level of immunity. So in that case, you don't have direct political involvement. And then secondly, we have done all that we can to make sure that the recruitment process is done to an independent process. And for those of you who are probably who look at the media and everything, you know that PwC, for example, has been working to do that. And we're doing that together with the partners that we are working with, the World Bank, the European Union. On the board is very diversified, and this even include non-Ghanaians. And you also realize that the World Bank, the KFW, are observers on the board, and very likely that one of our own, the African Development Bank, would also be an observer on the board. So the corporate governance framework has actually learned from the past, and I think that it's very important for me to make that clear. And then we hope that through that process, when a very good board comes on board, we'll be able to get the recruitment process again through a very transparent process across the institution.
I have another question for you. I'm sure a lot of you are wondering how many people they will employ, right? So that you can get an internship like, for example, when I left Legon in 2004 May, CTFM started in July. So basically, from my national service was with the station. So they opened the company. I worked in fresh. So imagine leaving UPSA with your first class or second upper, and then you are working as a credit officer in development bank. Wouldn't that be nice? No. But the problem is that they said they will not have any branch, and they are a wholesale bank. So I want you to explain, why can't you kill two birds with one stone? Open branches everywhere, have a big development bank, employ all these people, they will be happy, and then they will get employment. You also give loan to Abena, and we'll all just enjoy. Why are you doing just one branch? I mean, what kind of wickedness is that? I mean, what is that?
Oh my goodness, but actually, to answer your question very straight, I think that addresses his concern. The reason why, and again, the reason why we are doing a wholesale bank is just to make sure, the existing institutions, NIB, ADB, the commercial banks that we have, I don't want to, all of them, including our own SM, including our own venture capital trust fund, and some of the critical ones that government is even looking at to put in place, they will all depend on this institution. So we don't need an institution that is going to be everywhere, because it's going to work through the existing financial institutions to get to you. So if you want to have access to money, you wouldn't have direct access to the development bank. That will make it more immune to somebody going to the bank and say, oh, give me loan. You have to go to your commercial banks, and also your non-bank financial institutions. I know I'm talking to students, so the emphasis should not be, it's not, let's be very careful. This development bank is not just for banks. It's also for non-banks. So the idea is that you go to that institution, and then you have the capacity to get that institution to leverage on the funding from the development bank. It is that difference and that innovation that will cushion us a bit.
Abena, you are a banker I respect. Is this the right thing? Is that approach correct? Because you've raised capital for people, you've done this for decades. Is this the right approach?
I absolutely think it's the right approach. I think there's an important thing here. The development bank is structured to be able to raise very cheap capital. Currently, a lot of our financial institutions have to, if you wanted to deposit funds at your financial institution, what kind of rates are you looking for your personal funds? No, but what would you be looking for if you wanted to do a fixed deposit? You tell them to give you more than the treasury bill rate, right? You tell them treasury bill plus 2. Treasury bill today is about 12%, 13%. So you, for your own funds, you want 15%. And yet you want a Rabner's company to be able to borrow at 10% or less. So the difference is that the development bank is going to source funds that allows businesses to borrow in the target sectors at reasonable rates for long-term investment. And that is very critical. And therefore, we do not need to dissipate those funds in branches and human capital, because we do have existing distribution channels. So whether it's through digital means, the existing financial institutions, and I'm glad Sampson mentioned even the non-bank financial institutions, which has been the core support for a lot of the SME sector. So I think that structure of having those global partners bring their learning, that allows an organization like the Development Bank to raise large amounts of very cheap financing that it can pass on to our regular distribution channels to now on-lend or invest, even if it's equity, into some of these businesses is the right approach.
Fantastic.
So it is a specialist organization, but its biggest effect will be influencing the behavior of other financial institutions to meet the needs of the target sectors.
Great. I have a question for you, Rabna. I'm going to give it a bit more flesh. So 2 data points always worry me about Ghanaian companies. Registrar General tells us the vast majority of companies in Ghana are sole proprietorships, which means everybody wants to own it for themselves. We don't like partnerships. Number 2, we inordinately prefer debt to equity, which is what Abena said. I know you can't answer for everybody, but talk to me about that. Why are people skeptical in giving part of a small company out so they get money to help them expand?
I can't speak for everyone, like you said, but so I'll speak for where Ghanaian companies like us. We are very interested because, you see, it's not just the money we are looking for smart capital as well, capital that comes with some expertise, which is what typically you'd get in such arrangements. But you also want some fairness, because while the investors will say, oh, the Ghanaian companies are not interested in giving anything, who wants to own 100% of one city and stuff like that. On our end as well, the conversation is that the Ghanaian investor wants to give you 10,000 cedis for everything. So it's that fairness that needs to exist. For many of my colleague entrepreneurs, we have seen what it means for Mark Zuckerberg, for example. What's his stake in Facebook? It's not up to 20%. So we understand these things. It's just that the valuation process must be fair so that everyone, it's a win-win situation for everyone.
So sometimes you're not able to translate your sweat equity. So
Exactly.
you've worked on Where Ghana for sleepless nights for 10 years, and they say, well, we are valued at only 60,000. Whereas then maybe that comes back to you, right? Maybe we need to find a way of more fairly valuing companies beyond just their cash flow and their asset base. Because if you build a brand for 10 years and you've added so much to the brand, and somebody's come to do a valuation and says, oh, we are bringing money from Silicon Valley, but you are worth $100,000, take it or leave it. I mean, that's a problem, right? How do we deal with that?
Yeah, you see, if the company is listed on the Ghana Stock Exchange, that makes it a bit easier, because on the Ghana Stock Exchange, they're able to know the price per your share. So if it's listed, that's fine. In that case, become a public, right? Better. But the point is that, as you mentioned, it's all about control. It's about control. As these investors come in, they are going to, of course, there's going to be a dilution of that control. It's going to be weakened in the sense that they're also going to have a say in the operation of your organization or your company. So the proprietor or the owners may not be interested in getting or having their control diluted. So if that is the case, then they will stick to what they have. But that is not the best. Bear in mind, as a company, you are expected to grow and grow to impact society. Not only within even your country, think of international. That's why you must have a very good strategic operational plan for your operation. So if that is there, then you think of embracing or welcoming those who are interested in investing in your company. But it's not only on quantitative, not only quantitative variables that you have to look at. You have to first of all look at the qualitative aspect. How is the competence level of management? How is it? That will also influence your decision. I hope
you have answered the question, because, for example, Awura Abena's brand as a thought leader in the SME sector and what she brings to where Ghana has to count for something. It's not just how many materials they sell and what factory and what tools they have. And if you can properly do that, and I don't know if there's a class on valuation or stuff like this, but it's one of the major issues in these arrangements of people bringing money in and what's the real value of a company.
Yeah, real value. We
yes,
have models.
You want to make a comment on that?
Okay.
Yes, please do. Whilst I reposition.
Thank you, Rabna. You've hit a very important point. And so the truth is that when you are going through a process like this, you will appoint advisors. And many of them are licensed, and they will generally do a great job in terms of valuing you. But in my previous life as a practitioner or as an advisor, what we found was that a lot of companies run two sets of accounts. There's the accounts that goes to the tax person, and then there's the account that the owner knows the value of the business. So as you set out to run your business, the value that you tell is your profit, is what people will know, what they can verify. So the rules about managing your business in a transparent way that allows your financial advisors to put the right value on you, and for a potential investor to also see the capacity or the potential of the business cannot be underestimated. Because if every day your company makes losses, and yet when it comes to valuation, you say, oh, it will make a lot of money, no one's going to believe that. But if you have a track record, and it's the same problem that a lot of financial institutions have had making loans to companies, because there's the taxman's account, then there's the valuation and accounts that goes to the banks that says that the company is the best thing since. Wow. So those are one of the things we'll say as the company grows, to make sure that your accounting, all of those things are above board. So when it comes to valuation, you do realize the right value of it. But as he said, the stock exchange is one of the fantastic ways of realizing, and the market itself will tell you, with your share price going up or your share price coming down, investors will be telling you their view on the value of your business.
Please put your hands together for the panel. Series coming to you live from the University for Professional Studies, organized jointly between CTFM, CTTV, and the Research and Consultancy Center here at the UPSA. Here before a very enlightened audience of first-class students, banking and finance, getting ready for their final exams. They are laughing because their lecturers have brought some to second lower. Some are even on third class. Don't worry. When you leave school, you will still succeed, irrespective of your class. So what I want to do is to yield the floor to the students to get some of your thoughts. It could be on anything. These are 4 high-profile people. I have a mic, so you can just raise your hand. We'll bring the mic to you. Your question. Abena Amoah is the Deputy MD of the Ghana Stock Exchange. She has many, many years of experience in the capital markets. She's raised money for various things. Sampson Akligoh has lectured. He's now in charge of a very important part of the Ministry of Finance. The Ministry of Finance is like the cog in the wheel of the government. If the Ministry of Finance collapses, nothing happens. You should go to the ministry and see how many ministers go there and beg just for something to be released. So it's a very powerful ministry. And of course, your lecturer, Dr. Debrah, has proved himself, and Abena Agyeman as well, an excellent entrepreneur. So we'll take, it could be general questions or direct questions to any members of the panel, or just a comment on what you've heard so far. If you think we've missed an important part of the discussion, you think there was a question I ought to have asked which I forgot, please let me know. Who do we have first, please? Mention your name and what your question is. All right, thank you. There's a gentleman. If we have more than one, if you let us know so we can manage the questions, maybe 2 or 3 at once. So who's going first? Yes, give the mic to him. The man in his net. Oh, I thought you were raising your hand. Yes, give him the mic. No, this one. Just raise your hand, sir. The guy in the middle near the camera. Yes, please.
My name is Prince Asari.
Thank you, Prince. Prince, if you could rise so we can capture you well. Thank you, Prince.
Okay. Please, I want to know the sustainability of the development bank.
How sustainable is the development bank? Thank you, Prince. Any other question in that area? Yes, sir. Prince, you're a finance student, banking and finance. Level 400. Okay. Five marks for you. Please take note of his name. Go ahead, please.
Right. I want to first of all say thank you to the panel. Thank you so much for...
what's your problem? You won't ask questions. Somebody's asking questions to you. What kind of witchcraft is that? Master, go ahead.
Quick one. My name is Aben, and I used to be the public relations officer for this department.
Of course.
I have 2 questions. The first question would be, Ben asked a question that we have a development banks already. And so why the new creation of these development banks? And I heard from the panel that there was some research done into the existing development banks we have. And then there were reasons why we have to have a new creation. Okay. And my question would be that if we find reasons or if we find some problems with the existing banks, what hinders the government from resolving those issues rather than creating a new bank or a new development bank?
That's a good question. So
that would be my first question. And the other question would be on the SMEs, which now we are learning that M is even beginning again. So we have MS and all that. So the question would be, I heard that most of these SMEs, you need to grow your business to a certain level before you can actually seek for funds to grow your business to another level. So my question would be, for new SMEs, young people like us who are now starting up our businesses, you are telling us that we don't have any space when it comes to getting funds because we have to grow our business to a certain level before we can seek for funds from the government. I think that would be very unfair to us because we need that a lot because we are young people, we don't have any support, and we need that to really bring our businesses and support people in the world. Thank you.
So we have 3 questions. I think we can take a few more so we manage the answer better. Please come forward. There's a question from Mrs. Kwao. He's called Eben.
Yeah, thank you very much. I want to add one more question to what's the last speaker, and this goes to Abena. Yeah, will you tell us that it's always good to start your business on loans? Because you ask them, and as students, they think that to start your business, you have to take loans to start the business. So you have to.
Please make the answers as short and sweet as the questions so we can take another round. So please take the mic back to the speakers. Prince wants to know how sustainable development bank is. Eben wants to know why not fix the old fix the existing banks, why a new one, and then the length of time for companies to mature before you give them credit. And Abena, is that a good idea or not? Sampson, you go first.
The first question, sustainability of development bank. I say yes. I think the development bank is designed to be financially sustainable. And if you look at the capitalization of the development bank itself, it's a very big institution. And so if you even benchmark it against what happens in the financial system, it's totally sustainable. And the foundation models that is going to implement are the on-lending business, then the guarantee business, and then there's also a platform for factoring. But even that one is not a direct business that will support the ecosystem so that you can do factoring across there. So we have worked together, as I said before, to make sure that it is very financially sustainable and independent of government. So I think that is it. Then the second question, Eben, the perennial question. I mean, I think, again, one of the things that I really want to do is to try as much as I can to explain this phenomenon. So why a new creation of a development bank? I think in my submission, I indicated that this development bank is totally different from what's the name, ADB and then NIB. And I even said that at the when this was established, even during Kwame Nkrumah's time, these ADB and NIB, you and I can walk to them with a business plan or something, and they will give you a facility. Over the years, they even stopped doing development banking. As we speak, they are universal banks, like any other bank. So because of that, it is very difficult to get them to become a wholesale bank. And let me be very practical. So if, assuming that you take one of them and you want to make them like, what we discussed, Bernard talked about jobs. How many branches does ADB have? How many branches does NIB have? It means you have to close all those branches. You have to take the people, you have to retrain all of them. You see, so the issue is that the current state of those institutions doesn't make them like institutions that can be made wholesale development banks. But that is not even, that is one. Secondly, these institutions, ADB and NIB, they are not being left. It's not like nothing is being done about them. If just 2 years ago, government through GATT supported ADB. That government gave money to ADB. So ADB is there, and ADB is being asked to do their work and do it well. And again, through the same GATT process, NIB is being supported. So this question, it keeps coming, but the answer is very simple. Those institutions, from the technical people, they cannot be turned into a wholesale bank. Unless you want our brothers there, probably out of the 1,005, you'll be left with probably about 45 or 50 or something. So it's a very difficult question, but I think that is it.
All right.
I have one comment, but I think the other questions I'll leave my.
Okay. Rabina, there's a question for you from Ms. Kwao.
Yeah, so loan repayment is tied to your cash flows. And as a fresh startup, you yourself don't even know what your cash flows are going to look like. And so it would be very unadvisable to go for a loan to start your business. You haven't tested your business model, which is understanding how you will create, deliver, and capture the value that you're proposing you'll be given, right? As a fresh startup, your biggest asset is the credibility you have built with your family and with your friends. So that when you say that I'm about to venture into this business and I need support, and I want you to take my word that whatever it is, I'm always going to be transparent, and once I've made some money, I'm going to pay back, that you have lived your life up until this point in a way that enables your family, your friends, those that you've come into contact with, to trust and want to support you. But I would never advise that you go to a commercial bank to look for money as a startup. Maybe a venture capitalist, because they would then take you through a certain process so that at the very least you have your minimum viable product and all of those things sorted out. So.
Have all the questions? There's one for Abena. Oh, you didn't allocate it to yourself. Okay. We'll take another round of questions. Whilst we're at it, are there any hands? I have a couple of questions online here. So whilst you go there, there's a question from somebody called Akpakpavi on Zoom. Akpakpavi. He says, what lessons from the low patronage equity finance from the Ghana alternative market can the development bank learn to ensure the target of access to capital to industry is met? It sounds like an examination question. Akpakpavi, are you sure you're not a lecturer? Charlie, the question is, well, what lessons from the low patronage equity finance from the Ghana alternative market can the development bank learn to ensure the targets of access to capital to industry are met? Charlie, this is deadly. Charlie, your name is Akpakpavi. You are not small.
Hello, good afternoon.
Afternoon.
Please, I'm Andrew. I want to ask a question on the development bank.
Yeah.
You know, we all know it's a wholesale bank, which means it will be working with other banks. So for we like this, we will not go to the development bank. We'll be working with those underground. But here lies the case where we have competition in those kind of banks, and the development bank too, they'll be financed by people, not the government. It can be the government or individual like me. Me like this, for instance, will be looking for a higher profit. The banks too will be working, and they'll be working with other kind of, they'll be competing with other kind of banks. So let's say, ADB at first was, focusing on agriculture and
They are
all
now
those
universal.
kind of stuff.
Yeah.
Yeah, but now, because of competition, they've now turned into a universal bank. So what measures should be put in place, to solve all those kind of
Those
problems that we have?
misalignments. Thank you for your question, Andrew. Any more questions? Yes, sir. There's one here, and there's another one at the back.
Good afternoon.
Good afternoon.
Please, my name is Michael.
Michael.
Okay, so as you guys mentioned, you said that most of the private businesses in Ghana are mostly sole proprietorship.
Yes.
But if one may ask, how many of them are financially literate?
How many of them are financially literate?
Or how many of them are aware of this a capital market or a money market? So my question is that, what are the measures that a government is putting in place so that these ordinary Ghanaians who are sole proprietors can get access to this opportunity?
That's a very good question. So I think the questioner, the answer, people, you know yourself, so just allocate the answers to yourself. There was a question in the middle. Yes, sir. Okay, please go ahead.
My name is Edem. I'm curious about the sources of funds for this development bank in relation to its sustainability. So let's say I don't know how it's going to be done, the disbursement of funds. But let's say maybe first batch disbursement of funds to these financial institutions. And then there's the need for extra funds. Like, how consistent are funds going to be available such that whenever funds are needed, funds would be available for disbursement? Yes. Right. And then who is going to regulate the development banks?
All right, so that's a double back. So let's take our time. Andrew wants to know how you're going to deal with the misalignment between the objectives of the normal retail banks and the development bank up there. Michael wants to know the financial, how are you going to get the message across? All these people, Irabna is here, most of her colleagues may not even know about this. And then Adam wants to understand the sources of funds and how that's going to be more regular, and then regulation. I think those are heavy questions enough. So let's deal with them. Any member of the panel can touch any of them so we can share the burden. Because it looks like Sampson is sweating in AC, which is not very nice. So, Sampson, you start. Abena will help you, and the other two also support.
Yeah. No. I'm actually happy because these are young people. So I'm actually rather very.
And don't forget Akpakpavi's question. Oh.
Yes. Yeah. Yeah. High level intellectual, yeah. No, but I think I would want Akpakpavi's question in this fold. You see, this conversation quite frankly, talking to students here and talking to the professors, you see, this conversation that we are having here is just so important to this whole conversation of low percentage of equity and also the development. I mean, the fact, when Abena asked, right, or one of us asked who is going to be an entrepreneur, I see all the young people, a lot of them raise their hands. You see, the beginning of entrepreneurship can never be better than on this campus. I mean, if you want in fact, we're talking about a wholesale bank. If the professors and the students, especially the students read, and you want a venture capital to be superimposed on your business school, there is no better place to start than this. This is where you have the leverage and the credibility to test ideas, to know which ideas work, to get your mentorship and get everything done. And as a country, it is important that that ecosystem is created. And so this development bank in particular is being structured in such a way that when even at UPS, you take some ownership and you say that among the investors, we are going to have the biggest venture capital fund that is going to support entrepreneurship and innovation. The idea of equity, the idea of entrepreneurship then become well ingrained. And when you live here, then the support mechanism from Abena's outfit, the stock market, the private equity fund, and the outside venture capital funds become more compelling. So I think that one of the reasons why we have a low patronage of equity is because in our learning process, that mechanism is not there. And I was surprised that when I got to do better studies, especially business students outside this jurisdiction, the amount of and the loss of equity information that was being thrown at me. And the first time I even realized that you can make a lot of money was when I met a group of MBA students and we were introduced to a concept called search funds. So fundamental to this conversation. I think that maybe UPS could be one of the early bets in making sure that the drift is from what? I think this focus on government is minimized so that we take some responsibility, maybe at the personal level. So I think that we can shift the conversation right in this room and make equity conversation the centerpiece of the conversation. Adam, I think, yes, your answer is very legitimate. I mean, your question is very legitimate. Who is going to regulate the development bank? I think I mentioned the Bank of Ghana. So under the new acts, that will happen. Then the sources of funds. Yes, as government is capitalizing the development bank with actually $250 million. That's our commitment. Government has done $200 million. Now we have other institutions that are also supporting the development bank. The well-known one is the European Investment Bank. The total lineup capital for the development bank is about $1 billion over 3 years. Now the post-initial capitalization, things that is going to happen, and Abena mentioned one. We want this institution to be well established and even have a global credit rating. So what that means is that on its own, it should be able to tap the capital market both. And I mentioned local pension funds, and I indicated that we are going to convert some of the long-term funds that we have in the economy from short-term usage to long-term usage. So it's going to tap into the fixed income market, and that will help it to in addition to the fact that it could also leverage a lot of DFI funding. Because we have a partnership with EIB, we have partnership African Development Bank. And this model is, if you want to read a lot about the wholesale model, you can read about how institutions like, we have a couple of them in Africa, AFC and co, and then we also have a couple of them in Europe.
I think you can yield the floor to other answers as well. Abena and then Doc. Thank you.
Thank you very much, Bernard. Akpakpavi, the GACs.
Yeah.
We're actually going through a process reviewing the GACs. One of the things that we looked at was that there was a requirement for offers on the GACS market to be underwritten, which means that the minimum amount of capital that any company came to the GACS market to raise had to be guaranteed. The advisors must guarantee that that amount will be raised. And that stopped a lot of companies from being successful. So we're actually going through a process reviewing it to make sure that companies can come and then do what we call a beauty contest. You get investors in the room, you talk to them eyeball to eyeball, and then they can look at you, they can hear your story, and if they like you, they write a check for you. What we wanted to avoid was the public failures of offers, which will then undermine the company itself. Why have you gone to the market, announced a big IPO, spent money on advertising at City, and then your offer fails? Your other creditors may pull funds from you. Confidence in the markets may be eroded. So we are looking at the whole GACS concept. This year we've had one listing on the GACS called Peswa One. It's a very interesting business. They came by introduction and they are investing in small businesses to grow. And many of their investee companies themselves can also list on the GACS. I think Andrew, or was it Michael, asked about financial literacy. It is absolutely spot on. I asked in this room, do we have investment clubs here? This is where it starts. Another challenge I'm throwing, or another invitation, partnership I'm throwing to UPSA is that let's start investment clubs. Let's start the financial literacy right here in this room. What we are doing at the Ghana Stock Exchange is democratizing the investment experience for retail investors. So very soon we'll be launching some apps and digital solutions where you can on your phone go create a dummy portfolio, see how it performs versus the stock market, and then move this into an actual investment activity for yourself. So you get to learn more about the market. And we'll be launching very soon a lot of our financial literacy programs as well. And we'll be happy to partner with you. I think finally the thing I want to say about the development bank is that one of the key sectors it's looking at is mortgages. Very soon you'll be graduating, you'll be getting your first jobs, you'll all be looking at where your first homes. In another 5 years, I'm sure many of you are planning to have your first homes. This is an opportunity for you to now have your starter homes and mortgages that you can afford, whether you are working for yourself or you're an employee, to look at how you take advantage of the access to the cheap financing that the development bank can bring, so that we provide and meet the housing deficits that our nation has.
Thank you. Let's take a comment from Dr. Debrah.
Well, in relation to the enhancement of the equity aspect on Ghana Stock Exchange, that's as to how we'll be able to get the public involved so that surplus funds somewhere can be used, right? I remember my study on the exchange 2018 thereabout. They told us that the institution, that's Ghana Stock Exchange, was going to embark on nationwide education for people to really know the existence of the exchange, because some Ghanaians don't even know. They may have some money somewhere, right? So that is, I just want to remind my sister about it. Now, on the part of the development bank vis-a-vis the universal banks, I just want to stress on this, that the focus is not to take deposit from the public. That is out of it, not to take deposit, but to ensure that they lend at a very low interest rate. So that is one aspect that will really help the SMEs, right? Low interest rate, plus the long term, that's the tenor that they will be given, because it's a longer period. Because these universal banks, they're interested in getting quick profit to enhance shareholder value, right? Exactly. That is the focus. But on the part of the development bank, the most important is to ensure that the returns on investment, right, is imputed based on the economic value, right, to the society. That is one thing. So at the end of the day, the SMEs will really get funds at a very low interest rate as compared to that. That is one advantage.
This is important. Andrew, that's to you, because your question suggested that you didn't really know how they were going to get their money. You were saying development will take money from people like you. They won't take money from people like you. That's what Dr. Debrah is correcting. So please revise your notes on that point. Thank you.
I also want to mention this too, especially to my colleague Sampson, in relation to people who don't have any or business men and women, or let me put it this way, those who are about to start some businesses. If they have a very workable, business plan, and per their technical team, if they're able to analyze and realize that the market is there, the raw materials for whatever is there, I don't think they should turn them down. The development bank, one of their mandates is to ensure that those with very strategic, workable business plan, or plans are executed by giving them technical advice, so that at the end of the day, they will be like, they will partner with the team and ensure the execution of that particular plan. Because at the end of it, it's the execution that is necessary, because that is what is going to impact the society, right? So that is my point. They shouldn't just throw them out. So if you have a very good workable plan in the agriculture sector, in the manufacturing sector, you've identified a problem, because business itself is all about problem solving. If we're able to solve more problems, you have more businesses. That is it. So if they have a very good business plan, they should look into it so that they help them. That is where we can create more businesses and create jobs. Fantastic. Which will lead to the growth of the nation.
Please put your hands together for the panel. Thank you very much. We have a sizable... Yeah, I know. We have a sizable... I just joined the Zoom. We have a sizable number of people on Zoom, and I want to just ask that if there's any question there, we'll take them. I know there are lots of questions here. And so I see lots of people. Johnson, Efo Maoli, Nana Red Damoa, I see Nak. If my technical guys can help me, if you see a hand raised for a question, if you can let them activate their mics and somehow route their question through, it will be lovely. If we can't do that, you can send the questions in by way of text. Now, a program like this is not meant to answer everybody's question. Okay, so we've received so many. I'm just going to read some. Sometimes a question is good to help you think about an issue. And the best questions don't even have answers. Right? So don't be worried if your question is not answered. I'm serious. I've done interviews for 20 years, and I'm telling you, trust me on that. The best questions sometimes don't have answers. Now, is there anybody on the Zoom who wants to talk? I see Johnson. Johnson, you put on your video. Do you want to say something? Or just want us to see your handsome face? Johnson, just give. Okay. Or you don't know your name is Johnson. Some people, they enter Zoom, they put some names there. They don't even know their own name. Good. So I would really have loved to have a comment. Joyce, AC Boche, Ayi Joffrey. Can you help me? I want to take a question. Is it possible, Gilbert? Is it possible? Or is it too complicated logistically? While we figure that out, I'll read a few more questions for your reflection, not for your answer, just for your reflection. So, George Quist says, we need more investment banks in good standing like Data Bank in this country. And the SEC must be going to its mandate. So this one is not a question, it's a commandment. So you just go and tell the finance minister. He says, we need more, and he used capital letters to write. He's very angry. We need more like Data Bank must be up and doing. So go and tell Reverend Ubami Tete. Bernard Daisechi, that your long-term sustainability of its operation, considering that the Funds for Development Bank's start-up is a loan and will be serviced with interest. It's a long question, but it's for your reflection. Akwakwavi has another question, but I think he's taking enough. Who wants to talk? Johnson. Johnson, you have the floor. Can we hear you, please? Okay, hold on, Johnson. I'm going to do some magic. I'll use my phone. Just a second. If you can repeat your question, I'll put my. What happened? Okay, try it from that side. Please forgive me. I really wanted this to work, just to say we did it, but it's not working. To say we're able to get questions from Zoom, it's not working. Johnson, forgive me. Can we take the question from there? Johnson, go ahead. Put your mic next to it. It's not working, Charlie. It's not working. We can't hear. Okay, look, Johnson, sorry, text me your question. I wanted to use my phone, but it's the mic next to. Yeah. Johnson, start again, please. No. I'm even surprised.
Not be repeated this time around. How sure are we? And how are we going to manage culture as well as the people who will be working there?
Can you repeat the question, Johnson? We can hear you now. Repeat the question.
What I'm saying is that initially, in the initial comment of Mr. Akligoh, he said that the mistakes of the past will not be repeated this time around. How are we sure that this development ban, the former mistakes will not be repeated this time around? And how are we going to manage culture issues?
Thank you, Johnson. That's a very good question. Any more questions? Anybody else on the platform? If you are there, just put your mic on and talk. Huawei Y9 2019. Is that a person or a phone? Yes, go ahead.
What is my name?
Go ahead.
Yes, my question is, how do we have access to this funding? Do we do it direct with the upcoming development bank or our existing bank we are having in the system?
Thank you. Very good question. Any more questions, please? We'll take one more. Yes, go ahead.
Hello?
Yes, you're on air.
Okay, this is Akpakpavi. One more question.
Akpakpavi.
Yeah. Yes. So, well, the answer that was given was, I think the Ghana Stock Exchange lady gave a very brilliant answer. But I just wanted to find out if the funds are going to be made available to the banks, what regulations are in place to prevent them from giving the bank their money back to government as fixed income, so that maybe you give them money for SMEs, but the banks bring the money back to the government as treasury bills. What regulations are in place to prevent that?
All right. So there are three questions. I think we'll take one more. The first one had to do with culture. Akwakavi's question is clear. The second question, I think he escaped me, but I hope you captured it. Can we take one last question, please? From Zoom. Anybody else? Okay. Super. So can we comment on the questions we've... Is there a question? Yes, one last person, please. No. There's nobody. Fantastic. Thank you. Answers, please. This is the last round. The rest of your questions, I'll just read them.
Yeah, thank you. I mean, I think I've been able to capture two. The first one is that, how sure are we that we are not going to repeat the mistakes of the past? And then I think the emphasis this time around is on culture. I mean, I think in my first answer, I focus more on the institutional arrangements. Yeah, I think the issue of culture is a very important one. And I'll answer it quickly in two folds. The first one really is that, when you get your board right, you get your management right, and you get your first set of team properly, it helps. And when people know that they are recruited to work, but they're not recruited because they come from, maybe somewhere, then fundamentally the conversation is shifts. But, the second aspect of this answer is that I think this is a national conversation, because the truth is that all of us in our personal life, we all know we make mistakes. We all know that we don't get it right all the time. But what we do is that we move forward knowing that we can do it better. And I think that the whole idea of this development bank is that how do we ourselves create an environment to hold this institution more accountable than before in the past. Yes. Then the last one is, I mean, it's again another legitimate question, but I think the business model of the development bank, quite frankly, is a very well tried and tested one. In fact, as we speak, most of us who are familiar with the financial system know that even foreign banks give money to our banks to institutions, and there's a well-established framework for that. We have piloted something with the GESL, the Ghana Incentive-Based Risk Financing for Agriculture, and it's working very well. So when the framework that a development bank deploys to give the money to the banks is properly set, then it minimizes the...
Okay, for those of us who are non-bankers, I want you to elaborate on this because Professor Ibrahim has a question which is similar to Akwababi's question. What measures are being put in place to ensure that participating institutions or banks do not access cheap funds from the development bank and then on-lend to SMEs at higher rate? Because money is also fungible. So if somebody receives 10 and then he decides that he will put it in T-bills for the meantime, how do you know, when he mixes all the money, how do you know whether it's your money he's using or not? So how explain that thing properly?
Yes, so maybe I will try to give an example so that I don't pre-guess the framework. But so in typical on-lending agreement, when you go to a bank and you take your business to the bank and the bank thinks that your business is something that they pass their credit and they want to support, and then you're asking for a credit that meets a particular duration that they cannot offer, and then maybe they know that you want the credit at this rate because of the intervention. It covers what the development bank wants to do. What they will do is that they will pass on that facility to the development bank, and the development bank would also look at it and do it in a way that ensures that whatever framework they are given then goes to the final business. And then in practice, there's always a monitoring and evaluation mechanism that makes sure that the money goes to the business, which is a direct framework. So that is one of the framework that development finance institutions of this nature use. And because they also follow the credit, even though they don't give the credit, they follow the credit from the top to make sure that
fantastic.
Yes.
Brilliant. Any final comments from the floor? I think we've said enough. So I'll just take concluding remarks. I'll start with Dr. Debrah. I'll do Awura Abena, and I'll end with Abena. Sound, yeah.
They also look at the repayment capacity of the client.
Okay.
Normally, aside the primary repayment capacity, aside the primary repayment or channel, they also look at secondary repayment or secondary repayment source.
Okay.
The secondary repayment is basically based on the collateralization of what? The facility. That is what security are you going to use to back it? So that in case of any unforeseen situation, they can fall on that. Now, I just want to recommend to the development bank, right, in terms of creating something like SMEs, because I'm so much interested in that side, the SMEs, because they have huge impact on what? The society.
Yep.
So they can create SMEs loan guarantee fund. There is something that I'm just recommending. SMEs loan guarantee fund. That fund can be managed under a particular ministry. In this case, that will serve as a collateral, right, for any loan that is given long term. And in case of any unfortunate situation, they can fall on that to cushion the development bank. That is such a recommendation.
Consultancy to do the thing, because this is very powerful. Free consultancy.
Then also, in terms of the loan approval, the technical team must take very key note on the appraiser.
Okay.
One, what is the economic impact of the project that is being funded? They should look at it critically.
Yes.
And also the profitability. That is economic, the profit that they will make out of it. So that's what I was referring to, the bankability or scale. That must be assessed. So that at the end of the day, the loan will be repaid and the interest as well. Because the bank, we made mention of, I'm referring to the question that Prof asked in relation to whether the banks that they are going to use may lend higher than what the development bank technically is supposed to. That is a very important area that must be looked at. Because we are, as human beings or as human society, it's not everybody that goes with this issue of integrity. It's not everybody. And integrity is key in the banking sector. If you're working with people and you don't have good monitoring system in place, internal control system is not so strong, having internal audit that is not controlled by management is very, very important. So that at the end of the day, we will not compromise on the system.
Okay.
Because if that happens, the bank will not survive.
Fantastic.
Thank you.
Put your hands together for Dr. Debrah. Abena, your closing comments.
Yeah, so the points that Akpapabi raised about how are the banks going to be monitored to ensure that the funds are going exactly where they should be, and especially so that we don't end up with a situation where we are still talking SMEs, but it's the top tier SMEs that are getting the financing. And I was also going to talk about security, so the conditions around the loans that are given, and so that at the end of the day, we still don't have a situation where we are still talking SMEs, but it's still those who already were getting access to the funding that are getting it. And so what Prof talks about is perfect if it could be looked into.
Wow.
The other thing would be that sometimes the banks have not done business in certain sectors because really there's the lack of technical expertise in understanding of those sectors.
Thank you.
So we can't assume that just because we've said we want to do business in these sectors that the banks will actually do it. So the questions around what kind of retooling is done from the development bank to the banks so that those sectors are actually well understood and can be financed.
Amazing. Please put your hands together for Abena. Abena.
Thank you very much, Bernard, and thank you to the fantastic UPSA team here. For me, the Ghana Stock Exchange, as at the end of June, our composite index is up 36%. We've just been voted the best performing market in Africa as at June.
Wow.
And this is only possible because there are savers who have converted their savings into investments and they're investing on the Ghana Stock Exchange. The Development Bank is possible because there are savers who have converted their savings into investments and are investing in our Development Bank. It will likely be that the majority of the investments in our Development Bank will come from savers and investors outside of Ghana. So I'm here with a very simple proposition. Every single one of us in this room today are savers and potential investors. Let's start our investment clubs.
Yeah.
Let's start saving. Let's start creating wealth so that we can mobilize those savings into investments that we invest in businesses, the businesses you all want to own and run and generate. So the time to start investing is now. Let's start now. Thank you very much.
Professor, if UPSA Research and Consult Center were to encourage the formation of an investment club, let us know so that we can say it's one of the, because these people, they're on their way out, so they're thinking about exams. But I joined an investment club in, I think, second year. Okay, this was at Legon. And we were using the money to support some of the projects we were doing as young people. And I think it's been fantastic. The habit of investing, that's why I learned it on campus. So I think if research team wants to start that, when we open it, she will come and give the keynote address. So let's think about that. Thank you. Final words goes to Sampson before we take our concluding remarks from Professor Ibrahim.
Thank you very much, Bernard. I will keep it very short. I think I'm very happy about this engagement. I mean, and on behalf of the ministry, I've taken a lot of the feedback. I mean, it's important for us to build a broader consensus. But it is very clear to me that, I mean, from this engagement, that the development bank gives us an opportunity to really get a private sector to work. And all of us seems to be very passionate about it. And you want us to get to do it in a way that helps us. I can assure you that, you know, all the work that we have done so far, we've done our best so that we meet a lot of your demands. And that's collaboration is very key as we move forward. So thank you.
Thank you very much. Please put your hands together for the panel one more time. Before we do our final thank yous, we want to acknowledge all our fantastic participants on Zoom. If you can show the Zoom again, at some point there were about 50 something. Thank you all on Zoom. If you can make some noise on the Zoom, at least those who are watching on Facebook and YouTube will be happy. And you love what you see. Thank you so much. Click and like the Facebook video and the YouTube video as well and share. Thank you so much for your great questions. Star of the day, Akpakpavi, definitely. I want to now bring up the Director of the Research and Consultancy Center, Professor Ibrahim Mohammed, to give us his closing remarks before we take the closing prayer. Please put your hands together one more time for Prof.
Thank you very much, Bernard. And then thank you very much, our panelists, and then to you, our cherished audience. I think that has been a very insightful discussion. Particularly, we have been able to situate the need for this development bank in the context of what the SMEs need. And I think that that is very important, that we have a bank that can support the SMEs with long-term finance. Sampson has been able to make a very good case, and I think that we are all upbeat about it. Those of us who are yet to maybe start our own business, I'm sure that you are very happy about this announcement. Our guests also from the stock exchange. So the dean also nodding to that, which means that we work together to get our students to start this. So I want to thank you for sharing this knowledge with us. I'm sure our students have benefited, so have you also. Thank you very much.
Thank you. Yeah. And I always tell students, TAs, be nice to your students when you are TAs to them. So when they become general manager of radio station, they will still partner with you to do programs. If he had mistreated me at Legon and given me a fail, I'm sure today he can't even look at my face. So put your hands together for Dr. Ibrahim, Professor Ibrahim, for the great work he's doing. And I want to personally commend the Vice Chancellor as well. It's forward thinking. You are a very, very astute person, and your university is going places. You should be proud of being part of this university. Is there item 13, so we know how to prepare our students? I don't think there's item 13 for you. So, but I hope you've learned something. Thank you for your great questions. Closing prayer is coming in from Mr. Oh, yes, please give it a mic. Very important.
So as we close, I want to say that there's no better financing for businesses than paying customers. And as we are gathered here to be minded to patronize Ghanaian products, Ghanaian brands,
super.
Please start by patronizing Wear Ghana. You can order on wearghana.com. You can call or WhatsApp us on 0243 766 202. And this is a shameless plug-in.
Please go to her website and put it on the screen for me, I beg you.
Yeah, but this is really important.
Go to her website.
Build this country, development bank or not, without first choosing to patronize Ghanaian products and Ghanaian banks.
Wow.
Brands.
Amazing. Please put her website up. They have all kinds of clothes, and you can pay with mobile money. It's very important. We just got a message from Chenebua. He is the spokesperson for the Savings and Loans Association. He says, great program. It was very insightful. So we take it that all the savings and loans people are happy with the program. So thank you. We'll take our closing prayer from Dr. Siddiq Abdul Samed. Doc, please come and lead us in that endeavor. We'll take some group photos afterwards, and we'll be out of your way. Thank you.
Shall we pray? God, the most compassionate, the most merciful, we glorify your name for letting us have a very successful program. We glorify your name. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. Ar-Rahmanir-Rahim. Malik Yawmiddin. Iyyaka na'budu wa iyyaka nasta'in. Ihdina as-sirata mustaqim. Sirata allazina an'amta alayhim ghayril maghdubi alayhim wal-dallin. Amin.
Thank you very much indeed. I'll invite the members of the faculty to join for some quick photos. And then thank you very much, students. Good luck in your exams. May the A's flow. Amen. The A's will flow. The A's will flow. Thank you. Lecturers, be kind. Stop marking them down. Thank you. Photographer, please come and help take some quick photos. A big thank you to the team.